Mr. Made actually walked in this morning and I asked him a question and he said something about being humble when it comes to approaching the financial market. Before then, I thought that patience is what you need, discipline is what you need, consistency is what you need. But I've never seen it in that light. When you say being humble to learn something, I understand it in that light. But I've never seen the word humility or being humble, join together with the financial market. So I actually wanted him to talk more about it. So hi everyone. So my name is Zach, and here with me is Mr. Mid. I would like him to introduce himself.
Hello guys, my name is Mr. Mate. I'm a trader. I've been trading for 5 years now.
When you said you have to be humble when it comes to approaching the financial market, what do you mean by that, sir?
Okay, this is actually a topic I find very interesting.
Right.
So I might talk too much. But basically, when it comes to humility,
Yes.
I'm looking at it from two aspects.
Right.
As an experienced trader, sometimes you might hit some very big trades.
Mm-hmm.
And sometimes you might want to over leverage.
Exactly.
You get. So these are times when you need to stay humble and just stick to your normal risk management without over leveraging. So that's one aspect of humility.
Yeah.
Now, another aspect of humility is I was actually talking to one of the traders yesterday.
Right.
So we're talking about perfection. When it comes to trading, you can't be perfect. You can't be perfect. You can't be perfect in the sense that the market is always changing. And the randomness in the market doesn't give room for one to be perfect.
Right.
So you might have a setup that is always appearing and you think is always going to appear on a daily basis.
Again and again.
Okay, if you feel the need to be perfect, the market might humble you. Now, this is because when it comes to this market, you have to have something called cognitive flexibility, meaning the ability to adapt to changes.
Yeah.
But if you want to just work on what you think is going to happen, the market will humble you.
So that's humbled so many times.
So that's why it's very important for one to stay humble, adapt. If the market, just work based on what the market is showing you, not based on what you think.
Yeah.
So in that aspect, you need to be humble, keep on learning. Some people might think just because my strategy is working, I don't need to learn more. You actually need to learn more, not changing your strategy, but improving it, getting better at it.
Not changing your strategy.
Don't change your strategy. But
I think a lot of people struggle with that. I think we need to expand on this because I found myself moving from one strategy to another. Because let me tell you a bit of my story. I started learning the 200 moving average. I learned Bollinger Bands. You see a lot of lines on the chart. I moved to trend lines. I moved to chart patterns. I tried a lot of things when it comes to learning a strategy. And this is me now sticking to just one strategy. So if you're talking about that, I think I'm a victim of that.
Of course. When it comes to strategies, I've always said it, trading is 80% mental, that's your mindset, and then 20% strategy. Meaning anybody can learn a strategy, and there are millions of strategies out there, and they're actually working. But what makes the difference is actually the mindset. So, but going back to strategy, now the strategy that is working for you might not necessarily work for me, or that is working for others might. So you have to find a strategy that actually works with you, with your personality, with how you think.
That suits your personality.
Exactly. So if you find that, stick to it. Just get better at it, at your entries, your exits, and your management as regards to that particular strategy, not switching strategy. Because if you find a strategy that actually works with your personality, just stick to it. And if it's making you profitable, just stick to it.
I think this is going to be a turning point for a lot of traders, because most traders actually think that the problem is with the strategy. But when you look at it, when you zoom, right, you realize that it has to do with the mindset. Because you said something, and I've heard it a lot of times, that trading is 90% mindset or 80% mindset and 10 to 20% psychology. So for me, I believe if we are to talk about millionaires, and there's something called the millionaire mindset or the millionaire's mindset or the millionaire's mindset, I think there has to be a trader's mindset as well. So changing your strategy will not really give you what you want. You need to audit your mind. What is your mental approach towards wealth? What is your mental approach towards money? You need to have, like, should I say, you need to really sit down and think about the mindset that you have.
Of course.
Does my mindset actually allows wealth to come to me? Does my mindset allow money to come to me? I think that's one of the major reasons why a lot of people keep burning their fingers, because they came into the financial market thinking it's supposed to reward them, not knowing that most of what they are facing is actually coming from, or the defeat is actually, or the deficit rather, is from their mind.
Of course. I like topics relating to psychology.
Right.
So I have an opinion. Everybody's entitled to their opinion.
Yeah, exactly.
When we talk about psychology in trading, most people will talk about FOMO, that is fear of missing out, greed, impatience, and all of that. But at the end of the day, my own opinion of psychology is you have to train your mind in such a way that you'll be able to be okay with receiving money from the market, because
you have to be okay with receiving money from the market.
Like, you have to feel you are worthy of receiving money from the market.
Wow.
Yeah. Because, if you have this mindset that the market, some people still doubt that they can actually make money from these markets. They think, because some people think it is actually gambling. Some people think they can't make money from this market, literally. So you need to come to a place where you accept that you can actually make money from the market. There's this saying that trading is the easiest way to make hard money, right? Something like that. But it's actually true, because when it comes to trading, less is actually more. The less you open positions in the market, the better. So some people still think that even after entering position, they still need to be doing things on the chart, or maybe no. You actually need to be on the chart when you are backtesting. But when it comes to trading, once you've entered your position, all you need to do is just to be monitoring it, do your trade management, and allow the market move in your direction, or to take you out. Either one.
Move your. Most people don't want to agree with that.
Yes, but whether you like it or not, when it comes to the market, you will lose money.
I'm also interested in the fact that, so this is something that is just coming out of the blues, but I want us to talk about it because I feel it has to do with, it's going to help a lot of people out there.
Okay.
The concept of risks, right? I had a discussion with someone this morning, and the person said that he wants to risk money, and where he wants to risk that amount is putting it in the financial market.
Okay.
And this is someone who is still learning how to trade the financial market. So what's your take on that? Because people, I think there's a reasonable way to risk money. There's a reasonable way to risk money. And of course, some people think risk is just risking everything. So as a trader, someone who has been trading for quite a very long time, and I know you are also an accountant, right? You have quite a very, so what do you have to say about that?
Okay. When it comes to risks, you have to be calculative. At the end of the day, you have to be calculative. You have the whatever you are going to risk should be what you are willing to accept, even when you lose. Because we'll still say it, trading is not gambling.
Yes.
But you will lose money. Trading is actually a game of probability. Sometimes you lose, sometimes you don't.
Right.
Even if your setup is unfolding in a perfect way, you will still lose money sometimes. So when it comes to risk management, there's usually an approach. Let's say you have a 50% win rate. With a good risk management, you are good. When you have a 40% win rate, with a good risk management, you are still good. So assuming you have a $100 account and you have a 40% win rate, let's assume you lose 60%.
Yeah.
That is, you've lost $60, right?
$60, yeah.
And then you are winning 40, right?
Yeah.
Now, do you know that if you win one trade, that is, you've done 1:3, you're up with $30, making it 70.
Yeah.
That is 40 plus 30, right?
Right.
If you win again, what do you have? Now you've made an extra profit of 30. That means on 2 winning trades, you've recovered your losses. So this is the whole essence of risk management.
That's it.
So with a 1 to 3 risk reward, you're actually good. If you have if you can manage it well.
Yeah.
Though I will say this out there. We always advise that you risk only 1% or 2% of your account.
Okay.
I only give an example.
Yes.
Nobody should risk 10% of the account.
This is not a financial advice.
It's not a financial advice. Don't do that. You blow your account.
So there was this day I took a trade and it goes against me. And I came back to the market and I hold the market. I say, you must give me back my money. I'm talking about emotions now. So, of course, yeah, so let's talk about emotions, managing your emotions. But there are times you lost money or you lose money and you feel so terrible in the inside of you that you want to just sit down on your chat and I must get my money back. Were there days like that?
Yes, I have experienced that a couple of times, but that was at the initial stage when I started trading. This revenge trading of a thing is actually real. You lose money and then you want to get it back as quick as possible.
Losing is not fun.
It's not fun.
Not fun.
When you look at it, $10 currently with the exchange rate should be like 15. 16, understand? Yeah. For traders that are not really doing well, if you lose $10, it's going to affect you. Money, I'm telling you. So now when you look at when it comes to managing emotions, first of all, you have to understand yourself. Understanding yourself meaning at the point you've already managed or you've mastered your psychology, and you have a strategy that is actually working. Now, when it comes to emotion, you still have to come to a place where you are willing to lose the money.
Yeah.
Because you can't always win in the market. So you have to come to a place where you are willing to lose money in the market. And another thing that emotions does to a person is it actually makes you want to tamper with your trades.
Exactly.
So there are certain things you can actually implement. It actually works for me. Like watching anime when I'm on a trade. Sometimes I even forget that I'm on a trade.
Emotional support.
It acts as an emotional support. Before you know, I've already hit my TP without even knowing.
Yeah.
Just from watching anime.
Yes.
And I've given a couple of people this strategy, and it has worked for them. So it will help you stay calm even when the trade is going.
Because I remember days when I will take trades and my hands are literally shaking. You see sweat coming out of my hands and I'm sticking to I'm glued to my phone trying to check, is this thing going against me? Am I doing the right thing? I'm still checking, trying to adjust a lot of things here and there. It took me a while actually to be able to come out of that. So just do something based on what you're saying. Look for something that distracts you for the moment. Like just look for a distraction, right? A good distraction.
Yes.
Yeah. And stick to it.
And also, when it comes to picking a strategy, I always say pick a strategy that is in line with your personality. The strategy I'm currently using, it doesn't really require too many working parts. It doesn't require me to be changing from one time frame to the other. Once I've seen my setup and it is ready, I enter. I don't need to do too much. So that is where the concept of less is actually more. Meaning you just have to simplify your strategy in such a way that it will help you manage your emotions. If your strategy requires you to be everywhere, looking at 1 minute, 5 minutes, 15 minutes, there's no way you can be stable because price is actually fractal. Maybe what you are seeing on 15 minutes might be something different on the 1 minute time frame.
That's true.
So what that will do to you, it will make you very emotional. So just find something that works, something simple that doesn't require too many working parts, and stick to it if it is in line with your personality.
Right, that's very true.
Yeah.
So I know you to be a trader for a very long time, and I actually met you on the floor when I came to the floor, and I learned a lot of things from you as well. So what are the things you wish you knew that could have saved you years of wasted investment?
Yeah. Okay. If I'm going to mentor a person today, I think I'll focus probably 6 months of teaching them higher time frame bias. That is your directional bias.
Yeah.
One of the things I've struggled with is focusing too much on the lower time frame without understanding what exactly is happening on the higher time frame.
Right.
The lower time frame might align and seem very perfect, but at the end of the day, the higher time frame will always win.
Right.
Yes, so I wish I had a much understanding of higher time frame directional bias,
Yeah.
because with that you can streamline your entries and
Right.
you will be able to know the draw on liquidity.
Mm-hmm.
So I wish I actually knew much or
About
more about
directional
the
bias.
higher time frame
I think
bias.
it's one of the things I struggled with because, of course, I switched from boom and crash. I just came into the currency and I just entered the chart. I'll be lost for like 30 minutes because I'm just looking at the chart. I don't know what to do. I have no good understanding of directional bias. I just want to go to the 1 hour and I don't even know what I'm looking for. I just want to see what looks like what I know,
Yes.
of course. And
Yeah.
I was actually being random. So his advice to every trader out there is spend so much time understanding higher time frame bias because um, understanding the higher time frame or the draw on liquidity on the higher time frame determines what happens on the lower time frame because the lower time frame will always respect what the higher time frame is doing. So you need to have a clear understanding of that. You need to have a very good and a clear understanding of that. If you wonder why you are always being taken out on your trade, is because you lack this simple understanding of higher time frame bias, regardless of how good your structure looks like on the lower time frame. If it is not in line with the higher time frame, bro, forget about it. Forget about it. This is going to save you a lot. Trust
Absolutely.
me. So have a very good understanding of the higher time frame. The market is going somewhere, actually. The market is going somewhere and it is going to deliver based on what the algorithm is saying. So regardless of the substructures you are seeing on the lower time frame, of course, the higher time frame is key at this moment. All right.
Yeah.
So that's a very
Well,
good take.
also there's an idea
Right.
that I learned
Mm-hmm.
very late, which is you don't have to trade every day.
Hmm.
Yeah, there are days when your setup might not unfold.
Yep.
So these are days where you just sit aside and allow the market do its thing. Uh, Today is Thursday. I've not
Yes.
taken any trade
From
from
since
since
Monday.
Monday. Yes,
Wow. And
I've
you're
not taken.
comfortable.
I'm very comfortable because I've not seen my setup.
Right.
So not trading is actually trading,
Hmm.
because just imagine if you enter and then the market takes you out.
Yeah.
You
It's
actually,
painful.
yeah, it's not only painful, like you're on a drawdown.
Yes.
You get.
Of course.
But if you stay aside just because you've not seen your setup,
Mm-hmm.
you're actually good because you've not lost any money.
That's true.
Yeah, so
That's
too
true.
much exposure to the market is something that has I've learned. I wish I actually learned when I
Mm-hmm.
started. So
That's a very good concept because these were the things, these are the mistakes I made when I was learning actually. Like trying to look for opportunity every day, trying to enter the market every minute, every second. Like I'm just looking for an opportunity either to buy or to sell. Like I'm just out there to make money,
of
not
course,
really understanding that sometimes you just have to be patient. You just have to like exempt yourself, allow the market to do what it wants to do. Then once you see your setup played out, regardless, just know how much you want to risk and then you take the trade. So that's a very good concept as well. Thank you so much, Mr. Maid. It's good to have you.
thank you.
Right. So I hope you are able to learn a lot from this session. So we are going to be giving you more of this moving forward. So I want you to stay glued to our social media handles. Check us out on Instagram, Telegram, TikTok, and also on our YouTube channel. So make sure you follow us. More of this is going to come, and trust me, it's going to transform your life significantly.